Hello, dear students. Today we will start Unit 9th Principles of Insurance. Overview of the session which we will be discussing Principles of Insurance, utmost good faith, proximate cause, insurable interest, indemnity, subrogation, loss minimization. Principles of insurance. The concept of insurance is risk distribution among a group of people. Hence, cooperation becomes the basic principle of insurance. To ensure the proper functioning of an insurance contract, the insurer and the insured have to uphold the seven principles of insurance mentioned. First, at most good faith. Second, proximate cause. Third, insurable interest. Fourth, indemnity. Fifth, subrogation. Sixth, contribution. Seventh, loss minimization. We are discussing one by one. First is principle of utmost good faith. The fundamental principle is that both the parties in an insurance contract should act in good faith towards each other. That is, they must provide clear and concise information related to the terms and conditions of the contract. The insured should provide all the information related to the subject matter, and the insurer must give precise detail regarding the contract. Like example, Jacob took a health insurance policy. At the time of taking insurance, he was a smoker and failed to disclose this fact. Later, he got cancer. In such a situation, the insurance company will not be liable to bear the financial burden as Jacob concealed important facts. Second, principle of proximate cause. This is also called the principle of causa proxima or the nearest cause. This principle applies when the loss is the result of two or more causes. The insurance company will find the nearest cause of loss to the property if the proximate cause is the one in which the property is insured, then the company must pay compensation. If it is not a cause the property is insured against, then no payment will be made by the insured. Example, due to fire, a wall of building was damaged and the municipal authority ordered it to be demolished. While demolition, the adjoining building was damaged. The owner of the adjoining building claimed the loss under the fire policy. The court held that fire is the nearest cause of loss to the adjoining building and the claim is payable as the falling of the wall is an inevitable result of the fire. In the same example, the wall of building damaged due to fire fell down due to a storm. Before it could be repaired and damaged an adjoining building, the owner of the adjoining building claimed the loss under the fire policy. In this case, the fire was a remote cause and the storm was the proximate cause. Hence, the claim is not payable under the fire policy. Principle of insurable interest. This principle says that the individual insured must have an insurable interest in the subject matter. Insurable interest means that the subject matter for which the individual enters the insurance contract must provide some financial gain to the insured and also lead to a financial loss if there is any damage, destruction, or loss. Example, the owner of a vegetable cart has an insurable interest in the cart because he is earning money from it. However, if he sells the cart, he will no longer have an insurable interest in it. To claim the amount of insurance, the insured must be the owner of the subject matter both at the time of entering the contract and at the time of the accident. Principle of indemnity. This principle says that insurance is done only for the coverage of the loss. Hence, insured should not make any profit from the insurance contract. In other words, the insured should be compensated the amount equal to the actual loss and not the amount exceeding the loss. The purpose of the indemnity principle is to set back the insured at the same financial position as he was before the loss occurred. Principle of indemnity is observed strictly for property insurance and not applicable for the life insurance contract. Example: the owner of a commercial building enters an insurance contract to recover the cost for any loss or damage in future. If the building sustains structural damages from fire, the insurer will indemnify the owner for the cost to repair the building by way of reimbursing the owner for the exact amount spent on repair or by reconstructing the damaged area using its own authorized contractors. Principle of subrogation. Subrogation means one party stands in for another. As per this principle, after the insured, that is, the individual has been compensated for the incurred loss to him on the subject matter that was insured, the right of the ownership of that property goes to the insurer, that is, the company. Subrogation gives the right to the insurance company to claim the amount of loss from the third party responsible for the same. If Mr. A gets injured in a road accident due to reckless driving of a third party, the company with which Mr. A took the accidental insurance will compensate the loss occurred to Mr. A and will also sue the third party to recover the money paid as claim. Principle of contribution. Contribution principle applies when the insured takes more than one insurance policy for the same subject matter. It states the same thing as in the principle of indemnity. That is, the insured cannot make a profit by claiming the loss of one subject matter from different policies or companies. Example: a proper a property worth rupees 5 lakh is insured with company A for rupees 3 lakh and with company B for rupees 1 lakh. The owner, in case of damage to the property for 3 lakh, can claim the full amount from company A, but then he cannot claim any amount from company B. Now, company A can claim the proportional amount reimbursed value from company B. Last is principle of loss minimization. This principle says that an owner, it is obligatory on the part of the insurer to take necessary steps to minimize the loss to the insured property. The principle does not allow the owner to be irresponsible or negligent just because the subject matter is insured. Example: if a fire break out in your factory, you should take reasonable steps to put out the fire. You cannot just stand back and allow the fire to burn down the factory because you know that the insurance company will compensate for it. Thank you.